So what differentiates Itrs is a combination of things. We have tools which are focused on certain industries, such as financial services. We have a very good coverage of monitoring applications from the data and transactions going through an application, the application software, the infrastructure, the network, and everything in between. We also provide other tools that work in combination with our monitoring tools to give a combined view of the overall landscape. We call it a production tools landscape. Major achievement this year, we are just started shipping a new module called our Cloud Cost Optimisation tool, which allows us to analyze what's going on in your cloud spend, and then also analyze the bill that you get from your cloud providers, and to minimize and optimize what you're spending in the cloud. We're typically finding greater than a 50% saving for our customers. The global pandemic has clearly had a large impact on the global economy. Actually, our business has fared very well. We are a technology company, and we had, as business continuity, the ability to work from home anyway. So we had a very good infrastructure. All of our staff knew how to work from home. So the minute we went into lockdown, we were able to carry on operating as normal. And in fact, all functions are performing exactly as they would as if they were in the office. Our business is very resilient. We're not particularly exposed to the industries that have been most impacted, such as travel or restaurants or other services companies. So our clients have been pretty steady with us. We've been able to carry on business as normal. Clearly, the global economy is affected, and that will eventually flow through into our markets. And we are expecting the summer and the autumn to be a more challenging time for everyone. How have we been involved in operational resilience? Well, that's the main thing that our software is used for. A lot of our clients are financial institutions who are now regulated around operational resilience. And we've seen increased demand for our capabilities because of the very large trading volumes that have also been associated with the economic uncertainty. So we saw a large downtick in the stock markets, very large numbers of shares being traded. We saw very large swings in currency and bonds as quantitative easing came in to fund the situation. Bonds have been through the roof. We've had clients who, because of the demand on their systems, have installed extra servers at short notice. We had one client send us an email in the evening saying, "I've just put 75 servers live. Can I have monitoring software, please?" We processed it in the evening, overnight, and they had the software ready for the next morning as the trading day started. So that was obviously an increase in our revenue with the client, but a very fast turnaround to support a client who was having very large volumes of trades go through their production systems. So generally, it's been good for us. We've also had clients who have slowed down the procurement process because they need to focus on issues related to the pandemic. So it's not all been good news. There's been a little bit of headwind as well. But overall, we've fared very well. We are very focused on supporting our clients and giving them the tools they need to understand the capacity and the availability and performance of their production estate. But that's what our main job is. So the large volumes in trading that we've seen starting in early March meant that our clients are seeing many multiples of their normal peak volumes. We call that, 3x for 3 times, 4x, 5x. We've even seen as high as 8x normal peak volumes in certain asset classes. So this has caused huge workloads to go through the IT systems of our clients. Several of them have asked us to accelerate our capacity planning projects with them and to give them better insight as to where they're having performance issues in their production estate. Capacity Planner is excellent at analysing complex applications, and I mean applications, not infrastructure, to understand what the pinch point is, what is the limitation of throughput for an application that might need 30, 40, 100, 200 servers to deliver its service. We are able to analyze those very complex applications and tell them where the limiting pinch points are in the application. So we've had increased demand. Again, it's a downturn for everyone else. We've actually done fairly well out of this, as clients want the visibility as to what is limiting the throughput of their production applications. And we're able to point this out to them so they can increase the capacity at those critical points in an application and get greater throughput, more trades done, so they don't miss deadlines. We've got one client with a payments infrastructure where you have to get the payments done by a deadline, otherwise you pay penalties, and we've been working with them on improving the throughput at that critical end of day period. So Capacity Planner is a fantastic tool. It also lets you model scenarios. So if you are expecting more volatility through the summer, and we are, then you can model changes to your infrastructure. You can model greater volumes than are currently being experienced and see what the impact will be. So you could model a 5x day if you've only experienced 3x so far, for instance, and it'll tell you what you would run out of capacity on. So it's a powerful tool and in demand for those people who are hitting performance limits and need to understand and then remove those limits. So the areas that have most been impacted, I would think are probably FX, foreign exchange. All asset classes have been incredibly volatile. The stock markets moved massively when the pandemic first struck. So that would have been huge trading volumes of equities. The reaction by the governments and the lockdown, and then the stimulus packages that all governments have put forward have obviously greatly affected the interest rates and the yields. But the highest volatility has almost certainly been on foreign exchange. We saw sterling as an example, cable as it's called, sterling versus US dollar, move from 125 at the start of the pandemic down to 115 at its low point, and is now back up at around 125. That's a lot of trading of currency for sterling to move that much. And I think it's probably been the FX estates, the foreign exchange estates, which have seen the most highly volatile days. Plus the volumes of FX trades are incredibly high. So probably across the piece, that's been the asset class that's had the most. On top of that, you often have normal payments systems that are also feeding out onto the treasury platforms. And they've also had a high load as people have been buying and selling various assets, and you need to make payments across the payments backbones. So all asset classes highly volatile. FX probably the highest, and probably the most critical is your payments backbone that is actually making the payments processes. And there are penalties if you're not able to make payments or cut-offs. So it's an area where they have to be focused. The regulator's very focused, and we've been helping clients in those areas. So the future for ITRS looks pretty good, actually. We are growing fairly strongly. We have a portfolio of products. So one of the things that we are able to do is to cross-sell. We've acquired a couple of companies 18 months, 2 years ago, and we're now bringing those products to the existing customer base of our monitoring tools. We have also broadened our industry coverage. We were fairly focused on financial services, telecommunications, media, but we've been broadening out across a number of other industries, including gaming, online gaming, betting, and other industries. So we get expansion within our existing customers. We've got just under 1,000 customers, and we are able to sell them second and third product. We get expansion by moving into new industries, and we have general expansion in the marketplace because there is a move from infrastructure monitoring tools to more sophisticated application monitoring tools, and we're generally a winner in that game as well. So no, actually the future looks very positive to us. We're bringing through some new capabilities. I talked about our major achievement this year. The Cloud Cost Optimisation is a very powerful new capability for us. A lot of people are now spending money on the cloud and feel it's a bit out of control. Probably the bill is higher than they would like. and we're able to analyze that bill and analyze the usage of their software in the cloud and to optimize it with very large savings. We ourselves, ITRS, we put a budget in place for our own cloud spend, and the bill got higher than we liked, higher than our budget. So we pointed our own tool as our own cloud infrastructure, and we found a 75% saving by right-sizing instances and by managing idle time and by using the billing plans, reserved instances type capabilities that the cloud providers give you. So I think, helping clients, if it's going to be a tight financial market in the second half of this year and into next year, helping our clients manage their OPEX and their external spend so that they can get their costs lower and recover some of their profits.